Yeah, it's a great observation. I saw that chart as well. Fascinating. I think it speaks to where we are with markets. You have a solid foundation as far as the economy, but with where valuations are, markets are really struggling to find a new narrative here. The one thing I take a little solace in is that you're getting some rotation. You are seeing strength in some parts of the market. It's not indiscriminate selling, but it is a very powerful and very fast rotation from the winners of the past few years into some new areas. And so I think that chart really speaks to the point that this rotation is happening quickly, and it speaks to the fear that comes alongside having high valuations with a change in story.
Historically, rotations, how long do they last typically? Like here, we're rotating out of some high growth, maybe some techie names, into some more industrial, maybe small to mid cap. Is that a short-term trade measured in quarters, or could it be something longer?
I think it could be something longer. One of the things that I think is making people a little jittery here is that it's happening so fast and so powerfully. The counter to that is that it doesn't take a lot to move some of these areas that have been underloved. So we put together this matrix and thought about, what happens if AI works or doesn't work and the economy stays strong or weak? People start to rebalance a little bit. It doesn't take a lot of rebalancing dollars to improve some of those areas that have been winning. So I think the part people are worried about is the speed with which money's coming out of some of the winners. We've looked back in the past. First phase is usually short covering. Once you get moves like this, as the chart spoke to, people start to pay attention, and then the reallocations flow that can last a while.
Paul Sweeney taught me this, folks. It's a WEI screen. First of all, is there a whisper number on inflation?
There might be. I'm going to check it out on the WEI.
Okay, so I'm looking at WEI. 1 year trailing, Dow up 11%, SPX up 12%, NASDAQ all-in composite up 13%. Come on, Paul, it's a double-digit look back.
It is. It's a double. And so one of the questions, Robert, has been U.S. versus non-U.S. I mean, if you look at 2025, the U.S. equity markets had a very good return, but a lot of international markets did a lot better than the U.S., and that's continuing into this year. So maybe another little part of that rotation is geographic rotation. How do you think about that?
Yeah, absolutely. Initially, I had thought that the move at the beginning of last year was sort of a one-off, but there's been a lot of follow-through on that. And I think it really speaks to this reallocation trend. If you look back at the big returns and how much the U.S. exceeded returns of non-U.S. and how much large cap exceeded small cap, there is room for rebalancing here. So I don't think it's necessarily something to get overly concerned about. A lot of these moves can be supported by people just getting back to target and offsetting and rebalancing some of those dispersion and gains that we've seen in the past few years.
So what screens well for you guys these days? Because the world's a lot different. I mean, it's in terms of just in the last several months, some of the growthy names not rewarded as much as they have been in the past. So what screens well for you? Either industry, sector, factor? How do you guys think about that?
Yeah, absolutely. Our mega theme really has been the shift from the builders of AI to the users of AI. And just generically speaking, that tends to lend itself towards smaller companies, very careful stock selection, paying a lot of attention to who's increasing profit margins versus who's decreasing profit margins, and going where people are using that technology to cut costs and boost gains. Some of that's in the small cap space. Some of it's outside large cap mega tech.
Do you assume large cap mega tech rebounds? And not give me this, 2 week, 1 week thing. I mean, over a year, over 3 years, don't they just keep on going?
The underlying fundamentals are so strong that it's hard for me to believe that you have this decline continuing. So I expect sometime, between now and perhaps next quarter earnings, you start to get some stabilization around fundamentals. The thing that made me a little bit worried was last quarter and this quarter, you have great earnings announcements, market overall kind of flat, and you get that reallocation away.
They just issued a 100-year Google piece, 9 times, 10 times oversubscribed. You and I, we've never seen that.
Yeah, very rare. And picking up on your point from earlier, it probably speaks to the fact that the part of the season we're in is not spring training, but a little later into the fall.
So when you do see some of these tech companies come to the market in much greater size than we've ever seen in the past, does that give you pause here? Or are you all in on this AI thing and said, bring it?
Yeah, so we've been trying to really encourage people to move to risk neutral versus benchmark. We do think there's going to be a lot of volatility.
What so it means God's name does that mean? It's Friday.
It's Friday. Speaking better terms here. So, if your long-term target is 60% equities, we moved to 60% last fall. Before that, we were overweight equities. We thought there was a long runway. We do think there will still be some growth here, but this rotation is keeping top-line S&P returns down, and we think some of that continues. So I'm not, I don't think there's any reason to be dramatically underweight large cap tech. The fundamentals are there, But with where valuations are, people are really calling into question the narrative and the second derivative on growth, and the fact that if you have CapEx increasing and profit margins decreasing, you do want to diversify. So for years, people were punished for being diversified. I think now you get rewarded for being diversified. Doesn't mean you abandon large cap tech.
Diversified more into fixed income? Is that also an area? How are you thinking about fixed income?
Yeah, fixed income looks pretty attractive here, I think. While there are there is a potential today. Maybe we get an uptick on CPI, and who knows what happens on a daily basis. I think the path is lower for rates over time. You have a kind of squishy labor market, and you have a backdrop where inflation is certainly above 2, but not a major problem. So you'll get some cuts this year, and that'll lead to 10-year lower. That's a good backdrop for fixed income, and those yields are still pretty decent.